Welcome to the Private Lenders Podcast with your host from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. We appreciate it. Real quick before we get started here, we are in the process of preparing for our May Inner Circle Mastermind meeting in Dallas. If you are at all interested in checking that out, go to hardmoneymastermindinnercircle.com. We're a group of 25 or 30 private lenders from around the country. We probably have a few spots open, so feel free to go check out that site if you are interested. Okay, today we're talking about starting tax season. It is January 2024. There are a number of things that happen as a private lending company around this time and moving forward throughout tax season. And let's be honest, beyond tax season, because we're typically on extension for this reason or that reason. And we're gonna dive into some of that today, starting with closing out 2023 books. So depending on what's going on in your accounting operation and your business structure in general, you might have different business entities. For the lending company, like we do, possibly you also own real estate or have investment entities. And there's a number of different things that are happening inside our operation currently that hopefully give you some insight into yours as well. So we have 2 full-time accountants in our operation. In our total HMB world of 10 people, including staff and business partners, 2 of them are full-time accountants. And one, she is a controller who only operates the loan portfolio, lives in the mortgage office and the bank account and her email. And that's basically all she needs to do, and is constantly handling the many, hundreds, even thousands of transactions that happen in the loan portfolio each month. And then at the end of the year, she'll do her final reconcile. She does that each month throughout the year, and then finishes the entire year to close the books for 2023, and then lets us know that everything is done and 1099s and 1098s can be processed. We're going to jump into that in a second. Before we do that, I just want to touch real quick on some of the other business entities and what happens there. So before we get into loan portfolio, because that's probably a little more involved, if you have operating accounts, in all likelihood, you need to do the same thing. You have to close out the year and, have your staff or your bookkeeper, whoever it is that's doing that, or yourself in your operation, take a look throughout things and make sure that everything's done and coded correctly. Your expenses are all coded like they should be. Your income is called what it is. If you've paid people, so their expenses on your end and income to other people, you need to have the right W-9s in place. So like if you paid brokers referral fees, if you paid, third-party vendors and inspectors, appraisers, attorneys, accountants, all that stuff, right? All these people are getting a 1099 in all likelihood through your QuickBooks. QuickBooks is set up to do this pretty seamlessly. It'll let you know if any information for a payee is missing, like tax ID number, for example, right? Address. And then it's set up with QuickBooks Online to pretty seamlessly shoot out those 1099s by email, which is the best way to go, without a doubt. And always make sure to keep a copy, because damn well, like if it's right before April 15th and people are scrambling to get their taxes together, or later on before October 15th on extension, people are going to hit you up at the last minute and be like, oh, I didn't get this, even though it went out in all likelihood, right? People don't necessarily keep track of everything that they should throughout the year. So have that handy, right? Be a good service provider in that way. If people hit you up and they're like, oh, I need this urgently, and you can provide them something like that urgently, even though it's a small thing, it does provide them value. So that's a couple of things we're going to start with as we're moving into tax season as a private lending company.
Exactly. Now, just like anything else, we are not CPAs, we're not attorneys, so make sure you check with proper counsel to ensure that the way that you're operating your business is done correctly. We're just going to go through the ways that we've kind of done ours for years. So typically there's 4 forms that we're sending out. We're doing a 1098, which goes to all of the borrowers, right, to show interest, statement of the interest that they paid us. We have 1099 INTs that go to capital investors for interest payments. 1099 NECs, which are 1099 non-employee compensation, and those typically go to most of our vendors. And then there's also 1099s miscellaneous, which goes to like professional service providers like attorneys, law firms, things like that. So those are 4 different ones that obviously we have to do. Inside our business, we have about 600 of them that have to go out between all of our borrowers, all our lenders, and all of our vendors. So it obviously has to happen in an organized manner. We use the mortgage office, right? We've been using TMO for a long time. And to be honest, like the process is a little bit clunky, but from what I heard, I think a lot of the other servicing platforms are as well. I know someone in the mastermind group just asked some questions about how to do it through Mortgage Automator. And, if there was a CPA or an accountant that can help prep them for that. Again, I don't know how Mortgage Automator works. I just know how TMO potentially works. But you definitely have to send them out. Are they all due January 31st, Chris? Is that right?
As far as I know, yeah.
Yeah. And we do ours electronically via email. A lot of people mail them. I think a lot of these softwares are set up better to mail, like they're utilized better that way. Again, I'm not, not a CPA, not an attorney. Don't even know if that it's a double check with them as well. I'm just telling you kind of how we have ours set up. So I will tell you, if you have TMO, there's one little snag that we've run into year to year. And when in essence you populate all of the data, you get all the data, but you don't get an email address associated with it, right? So it populates it all. Then you can export it into an Excel worksheet if you wanted to. And then inside that Excel worksheet, you can do what you want. We use something called Track 1099. So what's called Track 1099? Yeah, Track 1099, which we like. We'll go through that here in a second. But you can also pay the mortgage office to just do it yourself, or just have them do it if you want. It's several dollars a record, so it would cost us like $3,000 or $4,000. So it's not worth it to us to do. But if you only have a few, you can do it. Also, if you only have a few, you can just do it yourself. Like, I don't think there's anything illegal. I might be wrong about this, but I don't think there's anything illegal by even doing them by hand if you need to. Let's say you have 10 that go out and you just handwrite them into the forms and mail them to them. I think you actually technically can do that. I'm not sure. Double check.
I think so, probably.
But I think you could potentially do it that way as long as you have the data. Just make sure, obviously, like that's why throughout the year, you got to make sure, you, even if you're not pulling credit, for some reason, I know some lenders are not pulling credit, even though strongly recommend them to. But even if you're not, you still got to get a W-9 form filled out. So you have their tax ID number and you have their social security number. So you can send them documents and paperwork at the end of the year. So the way that we do it inside the mortgage office, if you do use that software, or if Mortgage Automator is similar to this, and it is a little bit clunky and it's a few different steps, but in essence, we get all the data out of that. That's easy. In order to get the data out of the software, that's no problem. We export it into an Excel sheet, and then we have a guy, in essence, if you're not doing a ton of these, you can match them up yourself. But we have a guy that in essence takes all of that data and he cross-references it to all of our loan data to aggregate the email addresses from all of our loans into the Excel spreadsheet with just the 1099s and 1098s. So then we have email addresses, and then we import them into this software called Track 1099, which isn't all that expensive. And through Track 1099, it spits them out in the proper formats, emails them to the actual borrowers, lenders, and vendors. And then it gives us a PDF copy as well that we put on our server, to have a copy of, and then we also upload them to the IRS website by doing it that way. And like one of the things that Chris started off with is make sure you keep a copy, right? If you're mailing a copy to somebody, you better make sure you have that an original somewhere, because if not, they're going to drive you crazy, because literally 50% of the people will ask for it at a later date. And why do they do that?
Fail.
Because they're, real estate investors that are scatterbrained all over the place. And, they need it on April 15th or October 15th. They don't need it on January 31st, right? It's not important to them on January 31st. They're not even going to care if you get an email or direct mail from you. They're going to want it the day before tax prep time. that's when they're always going to want it. So make sure you have another copy of it.
Yeah, always. So yeah, I mean, there are a few steps in the process, and we also have an IT guy who we've worked with for a long time help, like, patch some of that stuff together and upload to Track 1099 and all that. But still, it's not that bad of a process considering we have to get 600 of these out. So let's back up a little bit, because I'm sure there's a lot of private lenders watching and listening right now who are running their business through QuickBooks and still need to put out 1098s and 1099s. And we were in the same position many years ago. I was our first accountant, right? Back then, it was just me and Jason. We did everything. And all the accounting stuff I did myself with the help of our CPA at the time, who I would go to with questions. And when it was time for 1099s and 1098s this time of year, I would make a spreadsheet with the basic information like name, tax ID number, address, and I would go through QuickBooks and, like, say we're talking about one particular loan, how much interest did they pay to us during that year? I would add it up by going into that loan. We used to keep them as, I think it's called a customer job within QuickBooks. And then I would just add it up and then put one number into the next box in that column and all the way down. Like, say, early days, maybe like 30 people, we did 30 loans, something like that. And for each one, I would add that data into a spreadsheet, send it to our CPA, and he would charge us a nominal fee to have his staff type those up and send them out. And it was manageable at that size, right? Like when we were doing 30 loans and not 250, all that kind of thing. But when you graduate to a loan servicing software, it really does streamline many, many things, as you've heard us talk about before. And this is one of them. This is an important one. And people in the mastermind, people in the inner circle, they always hit us up here and there about, do we have to send this? Is it important? What about the deadlines? And the answer is, like, it's all important. Like, the IRS is serious about this stuff, even about the timeline. Like, don't send 1099s late. Like, it might go under the radar and it might not. And there are, like, real penalties for each record that you might have sent out late. So I wouldn't mess around with this, guys. I would stay on top of it. We have about a week and a half as of this recording left in the month. Hopefully everybody's handling their 1099s and 1098s. And if not, I would suggest that you definitely jump on that now.
Yeah, no doubt. And the reason we use that service to do it is, you like their password protection and stuff like that. We're not just, sending an individual email out to somebody. Like when we, when a service like that puts together, these files, they're password protected and things like that. So, we're not sending that, because I don't think you can technically just email somebody one. I think you have to go through some security protocols in order to do that, because there's social security numbers and things like that on that. But through different software platforms, if you send it to them, they're password protected and things like that. And again, that's a whole nother can of worms that you're going to experience if you're doing this for the first time, because people are like, what are my passwords? What's my password? How do I open it? Right. So just off. You're going to get back office logged immediately. And guess what's going to happen? They're going to ask you that the day before tax time, because they're not going to look at it. It happens all the time, but you got to do it the right way. And it does take time, and it is a pain in the neck, unfortunately, but you got to do it the proper way. I'm trying to think if there's anything else that we prep for, this time of year for tax stuff, uploading them to,
this time of year, January, related to those things in particular, like 1098s and the various kinds of 1099s is what's going on now. Like later on in tax season, we can get down into some more nitty gritty stuff of how we're tax planning, how we structure our different entities intentionally, to be the most beneficial for different aspects of our operation. So I think that's probably it for this time of year, but we will revisit this stuff during future months coming here in the tax season. And, like we've been going through a lot of this business in different aspects, not just the accounting, but, lead flow and scripting and underwriting and servicing is about efficiency and accuracy. We have to move through in this industry a lot of things efficiently, and, simple scales and complicated fails, or, there's a lot of different ways to say that term, but that's very, very true in this high transaction, high volume world of private lending, where just many little things are happening all the time, like every day, every week, every month. And creating the whole system is something that we've always been very, very focused on being as best as we can at building and creating and running that machine. Make it seamless, make it accurate, efficient, all very important. It's very, a common theme that comes up when we're having our monthly trainings in the mastermind group, and definitely when we're talking about the full-time operators in the inner circle. So like I started with, if you are actively lending private funds and you want to join a group of other people doing the same thing, experiencing the same difficulties, growing in the same kind of ways, then I definitely encourage you to check out Hard Money Mastermind, innercircle.com. Next meeting is May in Dallas, and we hope to see you there, and we'll check you next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.